Hmm. Hey, me and JFresh have been uh, in the town square actively decrying the rise in pork prices. We tried to warn Dork like 50 times. Glad you made it. I've been here the whole time. In spirit? No, in my house. Here. Are you excited to pay 55% on Chinese goods? Hmm. Wait, is that the trade deal? Why isn't the market at like 4,600? Did you not check? I did, but there was no information. They said that they had formalized a framework for a trade deal, which means that there's no trade deal. A 55% tariff doesn't equate to a 55% price increase. Yes, it does. How do you think it works? Are you saying for the consumer? No, 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 no. Hold on, hold on, hold on, hold on. Okay, yes, companies can eat some of the pass through. But it is 55% if the rate is 55%. That is how they work. Corporations are going to have to saddle some of that burden simply because they'll lose market share if they charge 55% more for their products. It's a regressive tax. No, it's not between two countries. Hold on. I'm not even sure there is a 55% tariff in place. So leave that at the door, first of all. I've seen no such news. Check truth. Okay, we do know that the U.S. Trade Court has blocked. Okay, hold on. That's very vague. Is he just adding together the steel and aluminum tariffs? Is it true that you voted Republican just to short the whole market? No. Gross. That's because you're Canadian, AJ. Good morning. All right. Let's see. Hold on, I'm finding a paper on tariff pass-through. It's difficult because we haven't had a lot of tariffs since the Smoot Hawley. Mm. GF is supportive. GF is not in Pickles Picks because it's live data. And the market's not open when I write Pickles Picks. It could, yeah. Grindy, though. Grindy downside. You shouldn't ever buy puts on GMA. It's almost always bad. The vol crush is brutal. There's a few, like, instances with news where it can be... where it can work out, but it's pretty rare. Okay, and then hold on. There's some charts too, because I know everyone loves charts. So if you look at all products from two U.S. retailers, and then U.S. versus Canadian prices on those identical products, this is the 2018 tariffs. You can see that there's a very high correlation between the tariff and the realized price. There's a lot of factors that play into this, which people should understand. I mean, a 55% tariff does not mean that the item you buy is going to be 55% more money necessarily. But say that product is, 50% manufactured in China, the forward price increase to the consumer is an additional 25%. That's just because, but if the item is 100% manufactured in China, it does. It does go up by 55%. That price increase is 1-to-1. Now, where that price increase is absorbed, that's different. Okay? So, I mean, you have a lot of layers of obfuscation before the price is realized by the consumer. But that does not mean that the tax is not 55%. It is. So if you have one item that is declared at the border as being worth $100, okay, that item is going to be taxed at 55%. So plus $55 tariff. And that is what the importer is paying. Whoa. Now, the importer needs to make a margin on their import, right? And so, say their margin was, $35 prior to this, and they made $190 per unit. And then that, you know, fed to the retailer who's buying these units at 190 and selling them for, you know, 220. These margins can be reduced, but no matter what, that 55% is paid. Do you understand? So, you know, if you were paying 220 for this item, well, initially, before the tariff, you know, this might have been like 135, and then this might have been 165. If all those margins were to stay the same, this would be your new price. But there is room to reduce those margins, right? So if the importer takes, you know, $15 and the retailer trims their margin by half, now your price increase, you know, you're paying 195 for the product that was 165. But your exposure to the tariff directly has been reduced slightly. But I want you to understand, because it's very important, that this increase in prices is absolute. A 55% tariff does mean a $55 increase on a $100 item. Now, the place where tariffs have an impact on inflation is totally different. Tariffs negatively impact inflation over time. If unemployment rises or wages fall. And this is because tariffs impact demand. This is where tariffs can be really, like, they can have the desired effect on inflation, but it's the wrong approach. Like, well, it's not the current modern monetary policy approach to inflation. Generally, reducing inflation by reducing demand is a very bad way to drive inflation down, especially for stocks and, you know, the market, retailers. And this is, you know, this negative impact to inflation is the question of, you know, that $195 item versus $160 item. When you have less money, you're going to choose the $160 item every time. Even if the retailer's margins on that item are the same, this item may not have a 55% initial tax applied to it. But if unemployment and wages remain flat or very good like they are right now, then those retailers aren't going to take out that padding. They're not going to take out, you know, the importers aren't going to take out their $30. The retailers aren't going to take out their $30, which means as long as unemployment and wages remain high and within the expected ranges, that $100 item is going to be sold at 220. when this 220 price starts to reduce market share, say, Walmart sells this item for 220 and Target's like, well, fuck you. We can sell it for 195, still make money, and we'll sell double the amount of the item, right? Now people are going to go to Target and buy that item. So yeah, and this is there. So there's a lot of other dynamics at play, but the 55% tariff is included in all future prices, no matter what. There's nothing there that's absorbing it or reducing it in any way. Prices do get like higher, no matter how you look at it. The price at the output is higher. Even if they absorb some of the tariffs, even if the company were to eat the loss on 25% of the tariff, or 25% of the 55, so half, let's say 27.5. Even if the company eats the item that you buy is still 27.5% more expensive. We could potentially fall down to 30. Dealer hedging above Vega neutral is very weird. Basically, there's no snapback in the gamma hedge because the dealer doesn't need to hedge increases in volatility. So when you get a drop, your bounces are weaker and more likely to continue selling off because the dealer is already positively exposed to Vega. So down here, the return profile is more concave. Up here, the returns are more convex. So basically, sell off translates sorry. Sell off translates into more sell off. Down here, sell offs translate into bounces. So you talk about like the V that you get in a positive gamma environment. Yeah, why is Epic Pen so fucked today? Um, in a positive Vega, positive gamma environment, the MM does not come in to support this V. They don't need to. And so the V can keep going like that. So positive gamma, negative Vega. Positive gamma, positive Vega. So that means that because of the reflexivity found here, if vol rises, dealers already benefit and they do not hedge aggressively increases in volatility. And that creates convex downside acceleration, which means steeper. So, I mean, let me think of another way to put this that might be a little simpler to understand. In the positive gamma negative vega environment, the MM needs to buy. Now this is below VN, needs to buy on increases in volatility. And this is kind of this is a kind of a discussion about VOMA. Basically, VOMA is the gamma of Vega. Remember our derivative orders? You have your first derivatives, delta, but also Vega. So, Vega also has a significant effect, but usually in longer time frames. But basically, when you get a sell-off in this environment, the MM needs to rapidly buy to hedge increased IV. And this is where you get your V from. Now, when gamma is positive and Vega is positive, they're already positively exposed to that spike in VOMA. And so when the price drops, the MM doesn't do shit. Which can then lead to further price drops. Notice how the V's out of these are not very strong. The places where we've bounced since the high of the day. What happens when Vega and Gamma are negative? Oh, the MM sells into falling prices. So even steeper convexity. Just I'm talking about the neutrals. Clip it? Okay. So let's see if VNW is supportive before any zero DTEs. Well, I mean, right now, you have a higher probability that this will continue to sell off until the MM is positively exposed to Vega again, which would be below Vega neutral on the weekly. Those move a little intraday, so like this level could have potentially moved higher. That's not something, I mean, unfortunately, that's just not something you can determine intraday. Oh, that reminds me. So we're stuck here. I just said that we could keep selling off until the MM is once again negatively exposed to Vega. $5 ago. You should try using that speech on a first date and see what happens. Uh, I mean, I could only imagine, gosh, right? That's probably the hottest thing you can say to another human being. Thanks for confirming, Borkin Jones. Well, you go back into positive Vega, but I mean, remember that's this, VN is our assumption that Vega exposure, let's call it Vex, on the weekly contract is at 0. Which means that even if you were to move slightly below it, the total exposure to Vega is not significantly higher or significantly more negative. Because 1, 2. So the further away you move, the more significant the effect of that hedge. It gives fifth date energy. Say Vana again. I didn't say anything about Vana. Voma. Or Volga. Either one. Same thing. Djibouti is not an island, but no, it's still a consideration. Can you start selling my other Volga is a Voma bumper stickers? Yes, we could. Voma has two M's. I'm looking at that Trump Truth Social post again, and it really sounds like he's saying that we're paying 55% more and China's paying 10% more, which is accurate. You'd think he wouldn't describe tariffs so succinctly to his base. What a deal. It doesn't sound like a win, you know? Oh yeah, Basant was testifying today, right? That's probably not going to be super significant. There's a 10-year auction today at 1. I don't know where they're getting 30 years. What does this mean for end of week? Continue to sell off? No? Because the Vega neutrals are on the screen. Rug pull. Does the potential for a pullback before pushing higher all-time highs that you talked about on the weekend stream now off the table? No, no, we're very much in the same position. We did get a small pullback, but it wasn't really enough to shake anything up. We need a big enough pullback that the neutrals can rise. Like Vega exposure levels move higher. Right now we don't have that yet, so you do in fact. Uh, is 6,000 a reasonable pullback for VN to move higher? No, you usually need like a mile, like a slight correction, like 150 point pullback. VN will move higher on a small pullback, but not much higher. Brett's still taking an absolute beating. It's kind of wild. Yeah, a little bit. Hmm. Let's see. Can this bounce back? Big resistance at 40 now. There's some bot puts out of the money too. It's a little weird. Bot puts all the way down to like 25.20 below us. Which kind of makes sense, given that's where VN is. Oh, okay. I just won't tell you supports and resistances then anymore. That's fine. Sweet. Ban him. No, he's a pigeon whale. Now, if he weren't a pigeon whale at any point in time, no, it's good, man. I'm just fucking with you. Yeah. Next month when it lapses, can we ban him then? We can revisit the conversation. Then the original agreement goes into effect and I IP block you from Gamma Strike. Because you would never do that to me. Right? I think a big move. It's a 10-year auction. Why does everyone keep saying 30-year? This is a 10-year auction. The 30-year, I don't even know if we have a 30-year this week. We shouldn't. Next year, I think, maybe. No. Or next week. Not next week either. There's no 30-year auction. Tomorrow? It should be tomorrow, but I don't see it here. Oh, there it is. Yeah, tomorrow. Yeah, the 10-year is important. I mean, depending on the print, obviously. It's unlikely to get a tail given that core inflation was down a point today. Maybe people didn't actually rush out and try to beat tariffs. Maybe the economy is just actually slowing. No, it was both. It's both. Everyone rushed out to try to beat tariffs, and now the economy is slowing. But I think inflation will still come back. Prices still went up a lot. They're gonna stay up too. Also, don't forget about the rest of the reciprocal tariffs that have been on pause for 60 days. All right. Oh, I'm not trading anything today, so. But we could do that, I guess. Maybe I will. I still have to. I still have to get that fucking futures account up. Mm, just say you want to ghost his trades. That's the correct answer. Mm, When did he say that? We left a gap back at 32 down here, which is kind of tempting. $10 minutes ago, maybe? Interesting. Mm. 60, 70 seems unlikely. There's a bunch of bot calls at 60.45 here, but bot puts at 40.35. I feel like we'd need pretty fairly big shift in positioning. Hmm. I have a question about the S&P 500 not rebalancing. Okay, what do you want to know? Bid to cover was 2.52. Yield at auction was 4.421. Basant says he's prepared to roll the tape forward for partners. Negotiating in good faith. Yield before auction was 4.428, so a little bit of a pass through. Hmm. Why down? The auction wasn't bad. Another push higher. It just seems set up at end of day yesterday to be resistance. Is it today? Um, probably not with the bot calls at 55 and 60 right now, but I mean it's a major strike. I feel like we've seen most of the resistance we're gonna see out of it though, for now. 60 looks difficult. I don't know so much about, yeah, 50 is probably fine where it is. Yeah, I think we could push, we could keep pushing a little here. Like another 10 bucks. 58, 60, it's gonna get wonky, but do bot puts cost the same like throwing money into the fireplace? I mean, it's not that they're bad for intraday trading. You just need to be very in a positive, like positive gamma environments and stuff. You need to be very, very choosy about when and if you ever buy puts. I would say for most people, it's probably better to just simply never buy them in positive gamma environments. But I mean, there's still money to be made on them. We had like a solid $30 drop earlier today. Yeah, I mean, Gamma Strike should help you choose that positioning. a little better. Does PMI matter more or less in the current environment? More, because there's fears of contraction and growth. So services and manufacturing PMIs are pretty important right now. NQ's retesting 2200 here. Not really at a significant level. Well, 6056 for ES, I guess. Just somewhat important. Left a gap at 43 and 32 to the downside. Testing the 5-minute trend on ES. Maybe find a little support here. 16. Head and shoulders here. A little bit. Like a little tiny one. See if that breaks up. There's still a lot of bot calls at 55 and 60. Retesting the trend. Hmm. Yep, doesn't look like it's breaking down. That's correct, Saber. Hmm. Still bought calls to the upside. Also some sold puts at 55 as well. It's quite grindy here, but if we break up, we could move. Yeah, because when they sell puts, they're just pushing the MM. The more puts they sell above VN, the more they're just pushing the MM long Vega. Hmm. Getting over like 52, 50, 53 here is pretty important for a break to the upside. Wish they'd stop selling puts though. Little uptick in vol here, which is important. So, still some bot puts at 50 and 60. Slow puts at 45. Failed the trend on the 5-minute. Little failure. That's why I said that uptick in volatility was important. It's because it's important. Enfuse was, I don't know, I haven't looked at it for like a couple hours. Yeah, looks fine. Consolidating a bit. A little bit of support here. Ooh, failed. Support failed. Nice. Gap to the downside at 43 and then one at 32. Gamma falls off all the way down to 32. There is no deal. We'll bounce. Let's see if this fails. Ooh, it did. Neat. Okay, see. Pacers? I have no idea. Pacers. Yeah, it was an interesting dump. I wonder if it keeps going. Vol's still pushing up a bit. If we slip here, we could fall back to 30. Maybe even a tiny bit lower. Seems like a perfect time to pull a rug. I always think that. I mean, retail's been buying the fuck out of the dip, so it makes sense that their sentiment would lean bullish. I don't know if that's I don't know if that's accurate. Institutions still disagree with them. Left a little gap back at 53. Losing the gamma flip on the daily here. Thanks, man. I thought it was pretty awesome too. Still sliding. Maybe ES could pull back to like 33 or 27. We did not fill the gap to the upside that we left behind there. So there is still a little gap above us at 43, which I'd be cautious of. Pickles Picks was great last night. Why are you buying? I'm gonna remind you guys again, when we're around VN, it's better to be on the sell side with probabilities favoring puts. I actually overslept today. Can you give an example of what you would sell? Like, our larger sell off earlier, I would probably consider selling puts below where gamma bottoms out, so like the 25 or 20 put on that drop. Because, we're very positive gamma, so it's unlikely that the entire range is going to destabilize. At least in the earlier part of the day, which that still was. So something to, I guess something to think about is the kind of the extent of those ranges and where there might be hmm, some better pricing on those downside puts. I mean, puts are generally a little more expensive anyway. There was some argument for selling the upside here at the time. Um, it, this is right around the time I got on, and I was kind of talking about how, at least in the Discord, about how like the dealer complex was likely not to hedge any downside moves. So when you started to see volatility rise here, that was a pretty good indication things were going to sell off, which could have been an opportunity for calls, but calls are just riskier here overall. I've been selling condors. Yeah, you could do that too. You increase your profitability a bit versus selling, one side or the other, but you also open yourself up to unexpected price action, which will flatten out your profits completely. I did clip it. I'll try to turn it into a video later. You notice how volatility is increasing, but the dealer is not buying the dip? That's the effect of being in this like negative Vega exposed environment. Or positive Vega exposed, not negative. Sorry, positively Vega exposed. There's the gap fill at 32, I think. Almost. Did we fill it? What was the low here? The low was 32.76. Oh, we didn't. Interesting. Hmm. Now it's filled. Hmm. It was a hell of a sell-off. Yes, almost at 60.27 here. NQ breaking through 21.9 to the downside. Now we want to start to be cautious of support though. News. A little bit of resistance on the approach to 30 here. Need to see if things lever back up. Looks like sold put support locally at 20, but more significant sold support to the downside at 15 and 10, which is about where we bounced. So we'll see if positioning builds back up. We start to get some, we're gonna need bot call interest, probably. Right now, still a lot of put selling. And again, a moment like this can be an opportunity to sell puts as well. A couple minutes ago, but there is some advantage in selling puts on these lows like that. Pretty aggressive vol short.
Costellosaurus put their pickle in my jar. PJ made me think Tesla was going to 350. Made up for that loss with some puts. Sold one too early but sold the second near the bottom. Overholding for the win. I believed in GS in a 6025 test. Cuckoo 5.
Maybe retesting 21.9 here on NQ in just a second. Failed a little. Interesting. concavity increases as Vega exposure moves more negative, which it hasn't really here. It's kind of just flat. I don't know if the bounce is failing. It's just gonna probably take a little bit of support to get it going. Basant said that China has not threatened to cut pharma exports in talks. Ooh, a little bit lower low there. Interesting. Gap back up to the upside at 21. 15 tests are still a great place for bulls to sell puts. As our 10 tests. Okay, so we fell back to support here a little bit. Ooh. Some even more aggressive selling. Left another gap to the upside. So you got a gap there and a gap here. Both of them are pretty fat. Hmm. Interesting. Mm, yeah, I'm not really sure that this is the pullback to shake everyone off. Is Basant still testifying? It's almost 3 o'clock. Yeah, I mean, I kind of want to find out what he's saying, so.
How do you view the potential benefits of stablecoin legislation in strengthening domestic demand for treasuries and supporting broader access to credit products such as mortgages that Americans rely on?
Congressman Miller, that is a fantastic question. And I have been in touch, a lot of discussions with your colleagues in the Senate from London over the weekend as they push through their stablecoin legislation, urging them to get it to a vote as quickly as possible, because I believe that U.S. dollar-backed stablecoins, as you said, collateralized with Treasury bills could be a substantial portion, or create a substantial new buyer for U.S. Treasury bills. And I think equally as important, it can lock in dollar dominance. Over history, there's been a series of events that have kept the U.S. as a reserve currency, and I think passing this important stablecoin legislation could be that event for the 2020s.
I could not agree more with you. That's why I'm excited to see the push for it. Would you agree, Mr. Secretary, that pairing that type of stablecoin legislation with clear, modernized tax guidance for digital assets would offer the greatest chance of encouraging responsible investment, giving both individuals and institutions
One of the gaps to
confidence
the
in
upside
certainty
down
they would need?
fills. Still one back
Yes,
at
sir.
21.
I feel as well. I want to shift to our one big beautiful bill, Mr. Secretary. As we look toward the expiration of key provisions of the Tax Cuts and Jobs Act, I'd appreciate your thoughts on how extending the expanded standard deduction would improve middle-class families and how Treasury is evaluating the trade-offs associated with that policy.
Well, we've seen
Yeah,
the
there's a gap at
numbers,
43
and
also.
The
Although that's
largest
a little
tax
out of
increase
reach.
in history would add the great distress to working families due to the economic distress and to many of the provisions, as we just discussed, the child tax credit dropping from $2,000 to $1,000. And I don't even like to think about the havoc that it would wreak within the economy, especially within small businesses.
And, we hear a lot about, how this is only, a tax cut for a certain, demographic or socioeconomic class within our society. The average American, if this were to not go through, would receive the largest tax hike in our country's history. That goes from the person who has $0 in their checking account to the most wealthiest individual that we have in the world. I just want to make that abundantly clear. This piece of legislation, without its support in getting through, will give the American people the largest tax hike in government history, and that is what we are preventing with this legislation. Thank you, Mr. Secretary, and I yield back.
Good. Thank you.
Mr. Bean. Thank you very
Do you
much,
have a problem
Mr.
with
Chairman.
MM hedging
A
if the
happy
implied
birthday
daily
to
move is
you
not
and a
realized?
very
No,
good
the
afternoon,
MM just
Ways and
makes
Means Committee. Mr.
more money.
Secretary, welcome. I'm sorry you have to put up with this, including the profane language that we listen to a lot of folks up here. I don't know, their mom must not have taught them any manners. You, sir, could be anywhere. You don't have to do this. The only thing I can imagine is love of country. And so I want to say thank you. A grateful nation says thank you for your service.
It's an honor.
And thank you for trying. I know it bothers you as a financial guy, and I was a former banker. It bothers you that this country continues to go in the wrong direction financially. So thank you for trying to turn the wheel as little as we possibly can. And I think we're all finding out that wheel can get sticky at times. So thank you for putting some extra muscle in it. And part of turning that wheel is the one big beautiful bill, which, again, thank you for your service. There's so many great things in it. I'm going to ask you that, what's your favorite in just a bit. But first of all, I've talked to some restaurant owners that have confusion and angst over the tax on tips. And so once this legislation is enacted, Treasury will need to update its administrative guidance regarding the treatment of tips, particularly regarding the adjustable gratuities. You know, when the bill is already pre-filled out of tips and will you and Treasury, I know you're going to head this direction anyway, commit that Treasury will clarify its guidance so recommended gratuities such as those added to the bills of large parties where the customer retains the ability to adjust the amount are treated as tips rather than service charges, so the intended target that Congress wants to do it is you don't pay tax on tips. Mr. Secretary, what say you?
Congressman, we have a lot of data on tip income, so this should be a relatively easy endeavor, and we will work to make this as seamless and as efficient as possible so that the working people who receive tips, that it will be expedited. and that the small business owners will experience as little paperwork as possible.
Thank you, Mr. Secretary. That's the right answer. I listened to you. You've been speaking, and you've done marvelous work because you and Doge, the Doge effort, have said even before your tenure, Treasury was out of control. Not even the most essential information in its computer disbursement systems, which has led to over $165 billion in improper payments just last year. We double paid things, and then once we paid them, we couldn't figure out why we paid them. I listened to you of what's needed, and guess what? I've got great news, Mr. Secretary. Tomorrow, I, along with Joni Ernst, we're both involved in the Doge caucuses of each house, is coming up with a financial payment bill that says on every bill that the United States pays, we'll have a brief description of the purpose of the payment, the appropriations account, which the payment is to be withdrawn, the payment reported on usaspending.gov so it's transparent and the world can see where we're spending the money, and then an annual update of all information related to these payments. It's exciting. It's what you asked for. My question is, what do we need to do to get you on board this bill? And you can say you had me at hello if you want to, but how does that sound? Are you excited about that bill?
Sir, I'm excited about accountability on the payments. When I arrived at Treasury, there's something called a TAS, Treasury Accounting Symbol. One third of the disbursements that we sent out every year did not have a TAS. Without a TAS, a payment cannot be linked back to an appropriation. So there are approximately, imagine Treasury, the TGA is the checking account for the United States of America. Above that sits approximately 450 entities, whether it's agencies, that they just send down payment requests.
Downside gap at 15 filled. Still a gap at 21, 43.
That it act like a commercially viable enterprise and that task numbers be assigned. And eventually, the goal should be, perhaps you and Senator Ernst, once you pass this, your second goal could be that these entities that sit above Treasury could all pass an audit.
No, amen. We're working with your team now to make sure that everything that you want in that bill is set. So thank you very much. It sounds like we're going to make a great team. Last thing, anything that else we need to know on the one big beautiful bill? Is there any misinformation you want to clear up, Mr. Secretary?
Well, I don't think I have the time to clear up the misinformation, but I will say that I believe that the economic impetus, the certainty, because there is a duality between the critics of this administration. All I hear is tariffs. It's like TDS has become tariff derangement syndrome, and that all I hear about is uncertainty from tariffs, but then the same side wants to give us uncertainty on taxes. So let's get this bill done and get the certainty on taxes. We will have certainty on tariffs within some window over the coming quarters.
Amen,
and
Mr.
then
Secretary.
then the U.S. economy can realize its full potential.
Thank you, Mr. Secretary. I yield back. Thank you for being here today.
Ms. Plaskett.
Thank you very much, Mr. Chairman. Thank you to the witness for being here this afternoon with us, making yourself available and answering questions and engaging with the members of this committee. I first wanted to share that, I think back on the last administration, this administration, the transition. There's always going to be changes, ideas and changes, mechanisms in which we're done. But I think we need to talk truth about what the numbers were in each one of those. Now, we know that at the time of President Trump's inauguration, unemployment was at less than 4%. Inflation was below 3%. And the numbers that have been put out about where inflation is now has not really changed month to month. When we look at CPI, the Bureau of Labor statistics, those numbers have not changed significantly from the downward trajectory that happened from 2020. We have continually gone down in inflation.
Not a great
Economic
reversal
growth
yet.
at the time of inauguration was at 2.8% in real terms. And that was, according to World Analysis, one of the fastest growing economies in the world. The bottom 20% of workers saw the largest real wage gains during the Biden administration. We're going to give Jacket's jacket here in this committee. Additionally, we have seen since January 20th that the stock market overall has gone down 1.3%, and gas has gone up.
Ma'am, that's incorrect.
Excuse me. Let me get something straight with you first here. I've seen you interrupt everyone. When you come to someone's house, you respect their rules. And in this house, we don't interrupt individuals. And you're not going to interrupt my time. I'm going to give you time to respond. You may want to jot down some notes about things that you don't agree with me on so that you can respond to them at that time. But while I'm speaking, as the person holding this time, you will refrain from speaking, sir, until I am done.
I look forward to
until I am
responding.
done, and then I will give you time to speak, okay?
Look forward to the facts.
Thank you. I'll look forward to your response, whether they're factual or incorrect either. Now, one of the things that I noticed that the president, our present president, has said that he was going to do was going to bring down the cost of living. But as we all know, costs have not gone down. Whether they have remained stagnant at the amount that they were at the time of the inauguration or before, or they have gone up, real costs have not gone down for the American individuals. I know that my colleagues want to talk about in this bill what is happening in terms of their support for the American worker. There's a discussion I hear from several colleagues that if this legislation is not passed, it will then trigger the largest tax hike. That's because you made the largest tax cut in 2017 with this bill. And it's not to say that we cannot negotiate, as Congress has used to do, something in between there. It does not have to be this bill. It could, in fact, be something in between there. But that's not what we're doing here in this Congress at this time. Additionally, we have seen that, there's discussion about overtime taxes, overtime, the credit that's going. We know that only 12% of hourly workers receive overtime.
21
And
gap
then the
filled.
discussion about tips, which is only going to affect
McCall's are in the money.
2.5% of American workers, and only 40% of tip earners actually file federal taxes. So we are not going to affect everyone that we need to affect. Unfortunately, everyday Americans, the outcome of the supposedly strategic legislation that we have here is very predictable. We're watching the cost of bread, bacon, butter rise, egg prices continuing to go up, and the rising cost is not going to happen. One individual who I follow, James Serwicki, a classmate of mine actually from prep school who was at Yale, discusses that there's no acceleration of economic growth in this legislation because there's not being meaningful cutting of tax rates. We are going to be reducing spending, that's correct, but there are intended consequences to that as well. Additionally, let's talk about DOGE. $2 trillion, $1 trillion, $150 billion. Those were what we said the savings were going to be. I'm concerned that with this legislation as well, we are not going to see the real numbers. The numbers that are put out are not going to be, in fact, the real ones. Mr. Chair, I yield back.
Mr. Marine.
Thank you, Mr. Chairman, and thank you, Secretary, for being here today. You didn't get a chance to respond to Ms. Plaskett, so I'm going to give you a chance to respond, Secretary Bessent. Where did she go wrong in her statement?
Well, first of all, I would fire the staffer who did that chart because it stopped in February 2025, and prices are down substantially since then. But that's an inconvenient truth. Secondly, the S&P, if the Congresswoman would care to check Bloomberg, the stock market, as judged by the S&P, which is the most widely held index by American 401ks, is up on the year. Up.
It is up month by month.
No. Excuse me, ma'am. It's my time.
and we don't interrupt. Excuse me, we don't interrupt is what I was learned. Since January 1st, it is my business for 40 years to know what the stock market does, and it is up on the year. So,
thank you for that clarification, Secretary. I want to go back and look a little bit more history, some recent history. When Democrats had the trifecta just a few years ago as part of their Inflation Reduction Act, which actually skyrocketed inflation, they enacted their so-called Corporate Alternative Minimum Tax, or CAMT as it's known, a wildly complex and burdensome 15% minimum tax for job creators across America. This policy was so difficult to implement that even Biden's Treasury Department could not finalize regulations after 2 years of the law being enacted. That's why I was pleased, Secretary, to see that the IRS last week released guidance that provides relief from the CAMT. The guidance provides tax penalty relief for the 2025 year, but perhaps more importantly, the IRS announced that it will not finalize the Biden administration's proposed CAMT regulations in their current form, but will instead issue additional guidance in response to taxpayer comments. I know I personally heard from several constituents concerned about this disastrous minimum tax. Secretary Bessent, could you please elaborate on the recent action that the Treasury Department and the IRS took to provide taxpayer relief from the CAMT and preview any future action the administration might take?
Sir, the KMT is part of an overall simplification for businesses, and we have tried to do that across the board where we've seen it. As several members on the Republican side of the aisle have pointed out, this is a pro-business administration. I would categorize the previous administration as few business people, academics, career politicians.
Secretary, let's go back even further in history. In 1963, President John F. Kennedy faced a critical economic situation due to years of excessively high tax rates, wasteful government spending, and undulating unemployment rates. His proposed solution at the time, what was it? It was lowering taxes, both for individuals and for corporations. And by doing this, and in doing this, this is what he said. He said, quote, "This will restore an idea that has helped make our country great, that a person who devotes his efforts to increasing his income, thereby adding to the nation's income and wealth, should be able to retain a reasonable share of the results." I happen to believe that more hardworking Americans need to retain more and more of what they earn, and the more of that they retain, the better. It brings liberty to their lives. This is the idea precisely that I think President Trump is trying to get to through his Tax Cuts and Jobs Act in 2017, and then once again in the One Big Beautiful Bill. If you want to increase innovation, spur economic growth, and raise overall revenues, you lower taxes for everybody and put more money in the hands of hardworking Americans, small businesses, and farmers. Would you agree with that proposition, Secretary Bessent? And would you say that the One Big Beautiful Bill is perhaps the most pro-growth, pro-worker, pro-business legislation since the TCJA, maybe even more so?
Congressman Moran, what you are alluding to, the President Kennedy said was, and I will tie it back to this horrendous inflation that we saw.
Why do we have so many gaps? Illiquid down here.
Economic advisor was a Yale professor.
We're pretty far out of
He asked Professor Tobin,
the money from where Spot started.
What is the governing factor on government spending? It's inflation, isn't it?
And we're mostly in like a range where
That
it's
Secretary
largely
Yellen,
sold
who
puts.
was a dissertation student of Professor Tobin, did not.
So you have a
take
lot
the
of like
lesson
static
as we
positioning that's not really
inflation,
doing anything.
During the past period from this government spending. And look, I think that this is the nature of U.S. enterprise. This is why we have the greatest economy in the world. This is why Europe cannot get out of its own way. China has a command and control economy, that we push for Americans to be able to keep more of their own money, to simplify starting businesses, and that is what we are trying to do. And that's why, as I said, trade, tax, but deregulation is going to be very important here, because what we are finding is that it is very difficult One of the reasons it's difficult to make or build things in this country is because of regulation. If you try to build a pipeline, you need certainty that for us to be energy dominant, to build an electric grid, if we are going to be the AI superpower that we are on our way to being, it will require a substantial increase in generation capacity. So permitting new electrical generation, but equal as important, permitting the transmission. We need government to be a partner, not an adversary.
I wholeheartedly agree, Secretary Besant. The more liberty for our businesses and our individuals, our families, and our farmers, the better for our economy. It spurs innovation and economic growth. With that, I yield back. Thank you.
Mr. Swazi.
Thank you, Mr. Chairman. Thank you, Mr. Secretary. It's been a long day. We appreciate the time that you've spent with us, especially considering your travel schedule and how tired you must be. Thank you very much for your service to our country. We're very grateful to you. You complimented one of our colleagues earlier about it's great to see something bipartisan happening. There's very little bipartisan things going on right now, but to make bipartisan things happen, you have to talk to the other side. You have to negotiate with each other. And every problem we face in our country is complicated, and you can't solve a complicated problem in an environment of fear and anger where we just see everybody yelling and screaming at each other like this. So I would love to work with you, and I'm sure many of my other colleagues would like to work with you on the tariffs. As the
What do you think we
ranking member,
close?
Mr. Neal mentioned earlier, we negotiated together.
We could definitely
USMCA.
get
We'd
stuck
have
in
to
this
negotiate
lower
together
range.
using our congressional authority on tariffs. You talked
I don't
about de
I don't
minimis
think
earlier.
the
President
assumption
did an
should
executive
be
order.
that we're
I
going to
have a bill on de
bounce.
minimis. Linda Sanchez, who's the chair of the subcommittee, has a bill on de minimis.
Given the
Wants to
upside
do the same things
resistance,
the administration does. Let's do it for real. Let's do it together. You talked about, the president talked about negotiating drug prices.
If I had to pick a good
spot,
spot, somewhere between like 20 and 35 right now.
Most Democrats are in favor of negotiating drug prices. for
But
Medicaid and
we have
Medicare.
this
Let's work together
ongoing, and
to
there's still
accomplish
a
these
chance that there
complicated
could be
issues.
like bullish
Immigration's a very
news
big
about
issue for
something.
me. I know that's not really your
And that
area.
would
Waste,
change
fraud, and abuse.
expectations, I think. There's
Mr.
still a lot of
Green is
sold
part of the,
puts out at like 40 and
Doge caucus.
45.
I'd love to work on
So
going after waste, fraud, and abuse.
there's
But
definitely
I
some
think the
bulls that
Doge
want to
caucus, the Doge operation under
probably
Elon
bail
Musk
that
did a terrible
positioning
job.
out.
They cut the people overseeing the nuclear stockpile. They said that we have to hire them back. They cut the people overseeing the avian flu.
No,
They
most
had to hire
importantly,
them
who
back. They
sold
cut
puts
people
on the
overseeing
dip?
measles outbreak. They had to hire them back. They started a $2 trillion.
I sold some
they said
$59.95
$1 million
SPX
trillion
puts
we're gonna
and some
cut. And they said $150
$59.99 SPY
billion we're gonna cut.
puts.
And it's going
Nice.
to cost that much in lawsuits and all the inefficiencies that were created. Do you think that Doge under Mr. Musk did a good job?
I think that Doge under Mr. Musk has set in motion.
Rick, I just realized I haven't mentioned
I
your
understand
immense
that.
rugged handsomeness
Other than Mr.
yet
Musk,
this
do you think they did a
stream.
good job?
And that's a
That
fucking travesty.
I hope
Well, it
we
was,
can
but now
continue
it's
to root
resolved.
out the government.
Thanks
What
for
about
all the
ethos of
fish.
cutting people from
You
the
got
nuclear
it, man.
stockpile? That wasn't a good ethos,
Cheers.
was it?
As I say at Treasury, we move deliberately and fix things.
Right, so they didn't move very deliberately, did they? They moved kind of scattershot.
That the Congressman, I have the benefit of the Doge people who are full Treasury employees who either I or
I
my
understand that, and I
senior-
appreciate that. I want to ask you about Mr.
but
Musk's
my
overseeing of Doge.
But my senior staff interviewed these Doge people who are not Doge people, they are Treasury people.
Another breakdown pretty
Incredibly
unlikely.
And I believe you, Mr. Secretary.
No.
Do you think that Mr. Musk did a good job overseeing Doge? Because it's been reported that you said he was a fraud. That it was the whole thing was a
I think
fraud.
getting
Do you
out
agree with that
above
statement, or is
here
that
kind of helps the
inappropriately
reversal
reported?
along its path.
Fake news, okay. So, Mr. Secretary, I agree with 75% of the stuff that's in the big bill that you guys talk about. We call it the big ugly bill, not the big beautiful bill. But there's three things that I really don't like about it a lot. I don't like that we're continuing the cuts in tax breaks that we're giving to the wealthiest Americans from 39.6 down to 37. I think that's a deficit-producing, unnecessary tax cut that's going to just increase the deficit and not do anything to increase economic productivity in our country. The second thing I don't like is that we're cutting so much Medicaid for so many people in need, and we're cutting the food assistance program for so many people in need. And the third thing I don't like is this whole thing we've been hearing a lot about today, the deficits that have been created.
Yeah,
now,
no
you don't
problem.
agree with the CBO. We've heard that several times. You also disagree with the Committee for Responsible Budget, who said that there's going to be a $3 trillion deficit from this. You disagree with that also, right? Yes. And you disagree with the Yale Budget Lab. You went to Yale. You don't agree with the Yale Budget Lab. They say there's going to be a $3 trillion deficit from this. Do you disagree with them also?
There are a lot of things I disagree with Yale on these.
You
days.
disagree with the Penn-Wharton budget model, who said there's going to be a $3 trillion deficit from this bill?
Yes.
You disagree with Elon Musk, who you supposedly do get along with now.
Oh, shit,
It
hold
will
on.
massively increase the already gigantic deficit to $2.5 trillion and burden American citizens with crushingly unsustainable debt. Do you disagree with Mr. Musk on that issue?
Yes.
Do you disagree with Ray Dalio, who said that this is unsustainable?
I agree with Ray Dalio that we need to get our fiscal house in order.
Do you disagree with Jamie Dimon, who says it's going to cause a crack in the bond markets?
I met with Mr. Diamond the other day, and he wasn't necessarily referring to government finances.
Well, he said there's going to be a crack that's going to take place in either 6 months or 6 years. And let's ask you, when do you think that's going to happen?
I
that
believe
crack?
he was referring to market structure.
Do you think that do you disagree with Mr. Fink from BlackRock, who said this is going to be an unsustainable problem as well?
I believe that we have to get our fiscal house in order.
Let me just ask one more question, if I can. Do you think the interest rates right now are too high, too low, or just right?
When I came into office as Treasury Secretary, I said that I would not discuss interest rates or Federal Reserve policy. I would not talk about the mistakes they're going to make, only the mistakes they've made. But
You said earlier that a good economy made the interest rates go up under the last tax bill. So you're proposing that this current tax bill will be good for the economy, make the economy stronger. Will that cause the interest rates to go up? I'm not commenting on Federal Reserve policy, but I'm talking about the inflationary effects of what you say would be a good economy.
Well, I think you're conflating a good economy with strong growth. Under President Trump, we had strong growth.
And interest rates went up, you said. You just said in your previous testimony that caused interest rates to go up.
That the Fed raises rates because growth is strong. If we have
So do you think interest rates are going to go up under this bill?
If we have strong non-inflationary growth, perhaps we are already, Congressman, the market lives in the future. Perhaps we have already priced in the growth and the passage of this bill, so we will see.
Well, I've already taken too much time, but let me just say I'm very concerned that the increasing deficits, the tariffs, and the reduction of the workforce happening from some of the deportations that are happening are all going to be inflationary. And they're all going to cause inflation. They're going to cause interest rates to stay high or get higher. And it's something that we all need to be concerned about. And these complicated problems that we face require us to work together to try the debate of lively minds to try and figure out how we can make our country better and stronger. And this one-way issue of it's my way or the highway, and we're not going to work together, it's not going to work for our country.
Over.
Thank you.
I was very reliant, but
Thank
a minute 52 is a lot.
Thank you, Mr. Chairman.
Secretary, thank you for spending almost 5 hours in taking questions from this committee. I know some of the questions were out of line and unacceptable, and I appreciate how you handled it, and I appreciate how you represented the administration. Please be advised that members have 2 weeks to submit written questions to be answered later in writing. Those questions and your answers will be made part of the formal hearing record. With that, the committee stands adjourned.
food sits secretly in our kitchen cabinets. According to the FDA, food fraud is considered
All right. Let's see. If you guys could, I know it's a big hassle, like the stream, you know, just for, I don't know, the alpha. If they downgrade this shit to 720p, I'm out. Thank you. You can't ban yourself. Nice try. I don't know, but I know if it doesn't get liked enough, they fucking cut your bitrate like a bunch of assholes. I would sell the 50 test like an asshole. I never knew why you care until now. Yeah, if you don't get a lot of viewers, they fuck your upload speeds. Shill better? Ugh, I try to do the I try to keep a nice balance. 300 to 500 viewers is perfect. It's as much as I want to deal with. I don't want to go back to the days of like 1,200 people being in here. It's just fucking a lot, you know? 59.96 incoming. GME earnings used to be like 2,000, 3,000 people. Hmm. GME used to have earnings. There's support here and at 6,000. I don't know if we slip down to 6K. There's a lot of fucking sold puts at like 10 and 15. We could, because there's no support below that. And someone is buying like the 6005 put a bit. Hmm. There's something wrong with what's wrong with my mic? I can't wait for BTC to go back to like 30K. And for GME folks to whip out their tinfoil. When do they ever put it away? It's like an ongoing, constant thing. Why did tech sell off? Because it's overbought as fuck. I'm not kidding. It really is. Yeah. I think a lot of the downside we've gotten today has been largely mechanical. Why did DVN jump? Probably something to do with nat gas. When have I ever taken a vacation? Hmm. Inventories probably help determine the price of oil by giving you some insight into the amount of current demand. Mm. I mean, it seems like the advantage in positioning on an entry here would be to the upside. It's just hard to push up here. So it's like, I mean, that's the risk, I guess. Charm here is actually a little negative. I don't think it's so substantial that it's going to drive us down super hard into the end of the day. But the exposures, like the exposure here, is probably going to make it a little bit harder to get some upside. I mean, you have the MM buying the dip, right? And that's the thing you need to focus on most is the MM buying the dip. But you know, with charm exposure, the constant decay is to the sell side in all conditions at this price. If we get back above 60-30, then charm is no longer pushing down on price. Um, and if we get like above like 32-33, then it's pushing up. But in a lot of situations like this, when you're in positive gamma and you fall, like you're in positive gamma overall, but you fall deeply into negative gamma for the day, like price ends up in here, it can really struggle to get out of that range. And, you know, price action can kind of just, if you kind of put that sideways and think about it, you know, like in line with the bar chart, it can lead to like a lot of like, you know, testing the outer bounds, failing, bouncing, failing, bouncing, and then just staying like, and that range will narrow as you approach the end of the day because those negative gamma levels keep increasing. So gamma gets more deeply negative here and more positive here. And, well, I guess it's not really positive to the downside. So it gets more deeply negative here and then more negative here as well. Well, And sometimes that can actually lead to like the out of the money strike becoming more negative than the at the money strike, in which case price can break down to that lower level. So like 6,000 here is something to watch because there's so much gamma at it that like with the passage of time, you know, you could end up with a structure where like, you know, gamma becomes significantly deeper at 6K rather than, you know, 60-10, which would make it easier for price to fall over that 605 level to the downside. I'm pretty sure those are great drawings. We can't see them. Perfect. Oh, fuck you, Epic Pen. Well, now they make less sense because they're just scribble. Okay, I'll do it again. Fuck it. So if you think of gamma on the y-axis, right? Like the gamma that we have over here. You know, think of it like this being very, very negative at spot at 60-10. Right, and then it's a little less negative at 605, and then it's almost as negative at 6,000. And so what this generally does is because the positive gamma up here and the negative gamma down here are kind of going like this with the passage of time, you can end up just getting stuck. Like price can't really get anywhere because those levels keep increasing and becoming more resistive and more attractive relative to one another. But what you can get is the out of the money strike, this one, as it becomes more negative with the passage of time, it could actually end up surpassing, due to interest, the amount of negative gamma at spot. And so price could slip over the 605 level and fall into the 6,000 level and get stuck there instead. So that's like a way to look at all of this, you know. Obviously, you know, price moves to the upside, it can start to push off the weight of that negative gamma, as you can see. But you run into two things there, right? You have Vega neutral, so you have to start, once you cross that, you have to start dealing with those convexity dynamics. And then also, there's a lot of negative strikes to the upside. So any rally that would carry us out of this range would have to be sustained. Because you don't get back to positive gamma until you get all the way up to like 60-40, which is that's quite a trek. Now every strike you cross, it gets a little easier to the upside, but it's still quite a bit. And that's why that 60-30 test failed so precipitously, was that, just event, like, you have such a wide range that you start to experience profit taking before any support is actually found, which means that it's just all sells off again. If this were a lot earlier in the day, I'd have more confidence in that, like, bounce back to the upside. And I'm sure bulls will probably try again. But they may not get anywhere. Right? Because as we move up, the gamma at like 60-15 and 60-20 is going to increase. And then 60-20 is going to become, more resistive. Well, then it's going to become more negative, I guess I should say. And that's more of an effect of how gamma and moneyness work. Meanwhile, all our contracts go to zero. If you were selling contracts, like I said earlier, you'd be very fucking happy with that outcome. That's the best outcome when you're on sell side, is that the contract you sold ends up worthless. That's going to be 2025. Teaching the pickle jar when to sell versus when to buy. Fuck me. Uh, See? Boop. There's a reason for that. Like that reaction. Just a stop hunt? No, it's because as you move up, gamma at 15 and 20 relative to spot become more negative. So when you were looking down here at those earlier, when we were trading at 10, the structure was more, like this. And then as price moved up, these start to become more negative because they're at the money. And the 20 became more negative than the 15, which caused price to reject sharply. And then kind of find a middle ground right back out 15. And that's what keeps price pinned in situations like this. So when I was talking about how, like, price is going to narrow in range into the end of the day, that's because of that effect. Ooh, is my food here? He's a wizard. Yeah, that's what... Forget the rest of the things I said. Just magic. I do want to buy an out of the money call though, just in case. Just in case the bulls get a little they do some britches. Hold on one sec. Alright. I got giant crispy egg rolls. This is the best day ever. Look at that. That is an egg roll. Which they really just don't have anywhere else in the country. Those are chimichangas. If we do slip back and test the 6,000, I would then watch much more carefully for a bounce. What's an egg roll in America? Hmm. You know, like, the wonton skin? It's like a thicker version of that. And then it's filled with, like, cabbage and, like, 5-spice pork. Like ground pork and 5-spice. And then they deep fry it. Hmm. Like a spring roll, but way thicker. Like, I could kind of rip it in half and show you. It's like... See? It's not, like, crispy all the way through. Yeah, it's like an East Coast thing. Sometimes when I get bored of the stuff inside, I just take it all out and eat the wrapper. Ew. I don't know. Here you could kind of go either way. But the negative gamma at the 20 strike is falling off a little bit, so I went long. I just picked up a 60-30. See what happens. See if we get back to neutral. I can eat apples if they're cooked. And I've definitely had egg rolls stuffed with other things that are not Chinese at all, but they're kind of gross. Why can't you eat uncooked apples? Because I'm allergic. Fuck. Uncooked apples contain nature, and Gherk's allergic to that. Correct. There's enzymes in the apples that I'm allergic to that break down when they're heated up. I am allergic to birch. And all other trees. Hmm. There we go. I was wondering why that was being so weird. NQ testing resistance to the upside here. Yes, a few dollars short. Let's see how positioning is looking. Some in the money call buying. 10-15. Getting over 20 is a very big deal for the Bulls here. Hmm. Oop. Are you still working on a middle tier for swing traders? Yes, but it's going to be like a while. Like, we've got it all mapped out, but we haven't started developing on it yet. So it's gonna, yeah, it's gonna be a minute. That's correct. Crass ennui. I'm edging so hard. Thanks for sharing. They're still selling a lot of pets. Oop. Hmm. Getting the 20 out of the money is very important if it happens here. Running out of time and still working against Gamma, so. Hmm. There we go. That's the stuff. Five minutes till close. There's too much profit taking at the 20. This will fail. Lots of call selling at the 25 strike. So that's where, I think that's where this would, if it were to squeeze, that's where it would happen. Hmm. Two minutes left. Not much time. Ooh. Ding ding. Oh well. No breakout. Bulls don't get up enough juice. But we did get a close right above 20. So still a little bit of stability here going into PPI tomorrow morning. And the 6,000 level has not been lost, so. All right. Let's take a look. So, actually closing, is that exactly where I said we would close? Okay, I was off by 5 cents. Sorry. I tried. I mean, it's, yeah, still just flat. This is where I expected today to close, both last night and on Sunday. I do think PPI data could be a little bit worse tomorrow, and that would open up a little bit of range to the downside. Although I don't think too much range to the downside. There's still support around the 75 level, and we could test that lower gap and bounce off of it. But if PPI were bad enough, there's some potential that we could fill the downside gap, which would be down to about 59.40 or so. That could be kind of interesting going into OPEX next week, and would definitely be a big enough pullback for Vega neutral on both chains to get a lot closer to where Gamma Max is right now. Out here on ES, we're getting a little bit of distribution, but we still haven't gotten a lower low yet. So far, mostly just chopping along this trend line here. After breaking out of it 3 times, we are back below it again, which isn't, I mean, this consolidation is slightly bearish, but it has yet to fail. And we really need, I think we really need to see a loss of, 59.27 to really confirm any kind of actual breakdown here. There's more support at 85 and more support at 73. So, but that's where I'd start looking for like a real breakdown, right around like 59.27, which we're still really far away from. Yields moved lower alongside the dollar today. Pretty significant drop in the 2-year, right in the belly of the curve. No surprise on the 10-year auction, so the losses on that mostly remained throughout the day. Correlation kind of turning around a little bit into the end of the day, some dispersion there, but for the most part, it just spent all day breaking down, and our close levels are a bit higher than where we opened and where we were yesterday. So trending up slowly as we get more and more profit taking on those out of the money puts that were sold some time ago. Commodities moving up. We've got gold up, silver down today. A little bump in oil, big bump in oil. Holy shit, oil's up 4.5%. Did not notice that earlier. Yeah, big fucking move in oil. Time to start getting my 70 buys ready. And then agricultural and materials, mixed. Nothing really standing out though. Nat gas is doing stuff. That's interesting. Leverage on the carry trade falling today, probably largely due to the decline in the dollar, but forward yield on volatility also fell very sharply, down negative 13%, which is, I think, the second lowest level we've seen since back in April. And I think a lot of this has to do with the fact that realized vol on the 10-day time period has slipped pretty low, and that's encouraging a lot of short dated put selling. Usually these big dips in realize the forward yields down to these levels don't last very long and usually precede a snapback in volatility. If you look at this chart over time, you can kind of see that. There's several instances of it. So yeah, we might see a little bit of rising vol into the beginning or into the end of this week. I don't know if we get it into next, but bond volatility way down. Obviously, today's moves will bring it back up, but it does look like 3-month correlation starting to bottom out and turn around a little bit here. If we start to get some upside move on the 3-month correlation, I might expect bond volatility to rise again. Skew up yesterday, but still very much in the same range it's been trading in since, beginning of May. Definitely not the short put levels that we'd seen in the bigger parts of bull rallies in the past. So, that positioning is definitely holding off. There's still a lot of risk, and it doesn't seem that they want to leverage up as much into it as they did previously. Um, hmm. Stocks above their 20-day moving average rose yesterday, as did 50 and 200. Although stocks above the 200-day moving average are lagging severely behind, and stocks on the 50-day MA are slightly higher than the 20. If the 20 kind of like fails to catch up with that, we could maybe expect a little bit of a downturn in breadth. But I would say right now, breadth is very narrow. But that's just because the interest concentration is just still in like tech and AI. A little bump in vol today on VX. Met with another decline in correlation between VX and cash VIX. And Fed fund futures pricing in a little bit more of a cut now. Out in January, 2 cuts. Out in June of next year, slightly more than 3. So the little 1 point drop in core, turning Fed fund futures around a little bit there. But the bear steepener picked up 4.67%. Out here on the technical side, we retested the trend where we broke out from yesterday. Obviously losing this trend, probably like losing the 59.80 level, would be a confirmation of a breakdown here if this were to continue. It is interesting that we closed under 60.31, which is kind of an important technical level. I don't know if that's going to reopen a test at 59.47, but it could. So yeah, we'll see where this goes in the overnight session, I guess. We'll be watching that like week open, which is what we bounced off of. If we fail that, that might open up some more range. And that's about it. So thank you guys so much for tuning in. I will see you tomorrow morning. Have a good night, everyone. Later.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.